Hi, this is Michael Jones, Chairman and CEO of Caravel Concepts. Welcome to Market Insights, our weekly commentary on financial markets. Let's get started. This Market Insights occurs at a somber time in our nation's history. This week, a mob violated our nation's capital and tried to prevent our elected officials from discharging their constitutional duty to name Joe Biden as our next president. In this very difficult moment in our nation's history, we can be proud that our vice president, under tremendous stress, showed calm and decisive leadership. We can also be extremely proud that our elected officials refused to be intimidated by the mob, returned to their duties, and designated Joe Biden as our next president. In the United States, we all have a constitutional right to peacefully protest whenever we are unhappy with political or judicial outcomes. But violence is resorted to only by those who want to impose their vision of right and wrong on the rest of us and can never be tolerated or permitted. We can close this week thankful that our institutions held, that our elected officials discharged their duty, and that there will be another peaceful transfer of power in the United States. Now, as all this is happening, it's kind of easy to forget that what was supposed to be the big news this week is what was the outcome of the Senate elections in Georgia, and what are the implications for financial markets. And the obvious response from financial markets is party on, because throughout all this turmoil and all these difficult moments, financial markets just kept going up and up and up. And the reason for that is, one, I think investors were confident that for whatever drama unfolds, the United States would indeed have a peaceful transfer of power. So let's put all that aside and let's think about the implications of the Democratic sweep in Georgia. As we have said very consistently, while investors may get nervous if there's a Democratic sweep, we did not think it would be an impediment to a continued advance in financial markets. Why? Well, the risk is that a Democratic Senate would want to impose higher taxes, particularly higher corporate taxes. But this is a 50-50 Senate, and there are several conservative to moderate Democrats who are probably not going to sign on to any significant tax increases on corporate America. So we feel like the market is appropriately assessing that there's not a lot of chance that Democratic control means big tax increases. So what is the market excited about? It's excited about Democratic control virtually assures, in our opinion, that there's going to be another big stimulus bill. That indeed the $900 billion that was passed in the lame duck session will only be a down payment on another big orgy of fiscal stimulus that is funded by Federal Reserve money printing. And that was the magic cocktail that made 2020 a powerful year for financial markets, as tragic as it was for so much else in the country. And if you repeat that magic combination in 2021, and then you add to it what is also likely with a Democratic control of the Senate, a big infrastructure bill where we start fixing our highways and airports and railroads and all of our infrastructure, maybe our internet infrastructure, which has become so critical as we've discovered during the pandemic, and we all have learned to use Zoom and so forth. Those are going to be big investments that are going to be on top of the fiscal stimulus package. And yet they will also need to be funded by yet more money printing by the Fed. The more money the Fed injects into financial markets, the more excited people get about buying assets. So this is the combination of things that we think that financial markets have correctly identified as a powerful tailwind that the Democratic control of the Senate has added to financial markets. The modest tailwind for whatever tax increases could get past a 50-50 Senate is going to be overwhelmed by the good news of more fiscal stimulus and infrastructure spending. And so we think that our prognosis for continued advances in equity markets and our prognosis for the potential for a bubble in equity markets and maybe housing markets and commodity markets as well, all on track despite all of the drama of this week. Thanks for joining us for Market Insights. We hope you found it helpful. If you'd like more information, you can subscribe at the link below, or you can go to our website, caravelconcepts.com, for more of our research. Thanks.